Today's blog was entitled Electronic Arts, a Gameplay, excuse me. And you know, the real point here is Electronic Arts is a company that really has a couple of different reputations. When you look at this company over the last 20 years, or over the past 2 decades, I want you to notice that the actual earnings growth has been 15.7% for the $6.3 billion company, and that's the green line here. You can see they had a down year here and a couple of up years, and we had about 4 or 5 years of down years, and we ultimately had a stock swoon. Now we've got estimates for some earnings growth going forward, which I'll talk about here in a few moments. But if you look at this, an equal investment in this company 20 years ago, $100,000 investment in 12/31/1990, would have grown to $3,340,687. That's a 20.5% compounded rate of return versus a period of time where the S&P itself would have done 6.5%. So, if you look at it from that perspective, you could consider this a growth story. On the other hand, if you break this down and look at the first half of that 20-year period, or from 1991 through fiscal year 2000, you'll notice that the earnings growth was very consistent, averaged over 26%, and as you can see, stock price correlated to that and followed it until it kind of got pricey, in 1999 and 2000. $100,000 investment during this period would have grown to $3,611,874, or that's a 43.1% rate of return, and that's in contrast to a 10-year period where the S&P actually did quite well itself, averaging almost 15%. But if you recall from the previous picture I showed you, the majority of the growth happened during that 10 years. So let's look what's happened at Electronic Arts since then. If we look at the last 10 years, I want you to notice that, Electronic Arts has actually turned into a very cyclical company. Earnings growth has been virtually non-existent, and the company has kind of flatlined from here. It started out at around a $20 stock, and it ended around a $20 stock. Had a lot of stuff in the middle, but look at the impact that earnings had. $100,000 invested in this company over the last, 10 years would have actually shrunk to $93,859. That's a minus 0.6% compounded loss. Did better than the stock market, but I want you to note that all the growth of this company I showed you in its 20-year record actually occurred by the time we got into fiscal year 2000, and since then it's been much more of a cyclical stock with very little to show for it, or with their shareholders having very little to show for it since calendar year 2000. Now, if we look to the future for Electronic Arts, we get kind of an interesting picture. There is an expectation for a very strong rebound in earnings through the end of this fiscal year, or 2010 fiscal year, which actually ends in March 2010. So, the current price earnings ratio is, reported as 47.9, which is a blended PE ratio. But if you go to next year's earnings estimation by, the analysts at First Call that follow the company of $1.24, then you'll discover that it's actually trading, closer to 20 times fiscal year ends earning. And then the key point I want to show here is the forecast is for 20% earnings growth going forward. Well, this is simply a mathematical calculation. As I'll say in the closing part of today's blog, the trick you have is to determine whether or not you think this forecast is reliable. The company, I want to point out, does have no debt on the balance sheet, and has, generates, pretty decent cash flows along the way. But the question for the researcher now is to determine whether or not this is actually an accurate chart or not, because whatever, happened in the last 10 years, of course, didn't have much to do with what happened in the first 10 years on the, the 20-year area that we've covered here. The question is, what are the next 5, 10, or 15 years going to look like? Now, just as a suggestion, with my Fundamental Research Analyzer tool here, I have built it so that I can go up here to the top and click on the website of the company, and it takes me right into the website where I can start beginning to do some research. And let's actually take a look at that. First of all, if you go into this, website, you're going to look at the company's website, which is basically a promo, for their gains and for their business. But as a researcher, there's some interesting stuff to look at here, and I would suggest maybe spending some time there. But then I suggest you go into their corporate info down here at the very bottom of the website. Scroll down and go into corporate info. Now, I skipped a step here because you go to corporate info, you'll find About Us, Press, instead of Investors. I've already clicked on Investors here, and then I went further and I clicked on, under Investors, I want you to notice it'll say Presentations. And so I clicked on Presentations, and this brought me Events and Presentations, actually I think is what it says, which is this tab right here. And bottom line is you can listen to the webcast, you can go in and, find out more different information. You can even view presentations that the company has done. There's one on June 29th and one on June 10th. And let's take a quick look at that. Here I've clicked on the presentation that was done, just here recently in June, and what you'll see here is that you've got this was done on July 29th, 2009, and you can go through this presentation, and I've got it expanded out here, and you can go through their agenda, and you can, if you're looking to research this company and learn more about it, you can find a lot of information on how the company feels about their future as well as their past by going through a slideshow here. You can also listen to their conference call. You can read their, earnings transcripts, etc. But this is a good way for the researcher to find some information out on the company. You're getting the company's obvious presentation. This is the same presentation they're giving to, analysts throughout the country. However, I believe the best place to go is go click on this tab here where you have financial information. Here you can get their annual reports, their 10Ks, SEC filings, quarterly results, etc. And with this particular company, I would pay very special attention to their cash flow statements because the company does have no debt and does, have the ability to generate some strong cash flows, and it might be one of the real keys to unlocking the mystery of whether this is a good long-term investment or not. I hope this gave you some further insight into how to research a company. This is Chuck Carnevale saying thanks for listening. We'll talk to you again tomorrow.